What we'll do on a Monday morning is get you caught up on the things that happened this past weekend. Two things: OPEC Plus meeting and Berkshire Hathaway's earnings release on Saturday. First, the OPEC Plus meeting. And what OPEC Plus did, and OPEC Plus, by the way, is Saudi Arabia, Russia, Iraq, UAE, Kuwait, Kazakhstan, Algeria, and Oman. Those are the 8 countries that make up OPEC Plus. They added 137,000 barrels per day starting in December. They've been very modestly raising output in order to win back market share from the U.S. and shale producers. Okay? That is a bit of a news item from that, but adding more supply to the market. One thing I want to say, on Friday, the chairman of ExxonMobil in an interview said that they make double-digit returns at $35 a barrel in crude oil. Just something for you to think about when you're worried about the price of crude. Anyway, now let's get to the second, which is Berkshire Hathaway's earnings. Now, Berkshire Hathaway came out with earnings. They released them on Saturday morning. They showed a significant increase in net earnings to $30.8 billion, driven by higher operating profits and strong insurance performance. I'll get to that in a moment, but what was the most significant? Warren Buffett, a net seller of stocks, sold more than he bought, and their cash now, $382.7 billion end of September. So no shares in Berkshire Hathaway were repurchased during the quarter. They were a net seller of equity, selling $6 billion more in stocks than it bought. By the way, insurance, the pre-tax underwriting earnings in the insurance segment tripled to $3.16 billion. So more supply from OPEC Plus, but halted from January to March. And then Berkshire Hathaway, $382 billion in cash and selling more stocks than they bought during the quarter. Interesting notes there on how Warren Buffett is thinking.